Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Elon Musk's AI startup xAI is rolling out Grok 4, and it will be coming to Tesla vehicles, quote, very soon. Plus, Greylock partner and LinkedIn co-founder Reid Hoffman weighs in on the AI talent wars, why hundreds of millions for salaries is not crazy. And Varda Space raises $187 million in a Series C funding to produce medicines in low Earth orbit. But first, we check in on these markets that just pull back from those near-term highs. Again, we're actually bouncing off of our lows. We're seeing the Nasdaq 100 down only 0.4%. It had sold off more. We've got a big bond sale today. That's a test of appetite on the long end of the curve, and that a lot has been dictating what's happening in the equity markets. We take a pause amid the ongoing barrage of news when it comes to tariffs, Brazil, the latest in the line of fire. But we're looking at crypto still catching a bid. Look at this, we're at 111,000. We exceeded 112,000 yesterday. So risk asset of choice at the moment is up more than 20% year to date. Move on, have a look at some of the individual moves that dictate the move of travel in the Nasdaq 100. Nvidia's off by 0.3%, coming off of that all-time high that we on an intraday basis hit yesterday of $4 trillion. We pulled down, so therefore the Nasdaq 100 probably lower. TSMC, though, actually the ADRs are in the red, but more broadly, analysts are saying that the latest June numbers on sales, well, they're being hit more by FX woes. This is a strong set of numbers coming from the AI demand and Apple and Nvidia demand for the chip-making juggernaut that is TSMC. And I'm looking at Tesla up 3% in excess of. This is as we get not only hints from Elon Musk on his platform X that we'll see robo-taxi coming out in California, in San Francisco relatively soon, but also Grok 4. The announcement of the Chatbot, of course, that was showed off yesterday, also coming at Tesla in the near term. Let's dig into that with Jackie Davolos. And Jackie, this really is moving the stock, people anticipating what Grok 4 and the Chatbot could do when you're in the car.
That's exactly right. And because with Grok 4, Musk actually presented these two new models kind of as a breakdown of the release. It had Grok 4 and Grok 4 Heavy, and the latter is really the company's this multi-agent version that offers this advanced performance. Musk said that Grok Heavy could actually deploy multiple agents to work on a problem, and that they can all compare their work almost like a study group. And it said that Grok 4 actually shows frontier level performance on several benchmarks. So this is a really exciting moment for the company, especially when you think about just kind of what a tumultuous week it has been for X and xAI. But as for Tesla drivers, you know, this has been kind of something that's been teased and really anticipated, just given how intense these AI wars are coming. And the more applications we can find for them, companies are really eager to find ways to monetize that.
I mean, precisely. Many have seen the intertwining of X and xAI, and then at some point, Elon Musk even saying maybe Tesla should invest in xAI more broadly because of the dividends it will pay for the company. Remind us of the tumultuous nature of this week, though, because we have Grok 4's unveiling, hot on the heels of some pretty difficult content that it was spewing out across the platform.
That's right. And you know, it was related to some replies to user posts that those replies had anti-Semitic tropes. It was glorifying Adolf Hitler in some others, and xAI, the company, was forced to remove these inappropriate posts. And the company also acknowledged that, you know, they shouldn't have been up there. But Musk himself kind of almost avoided explicitly referring to them, but just said that, quote, we need to make sure that AI is good AI. And he said that on Wednesday night. So, of course, probably referring to some of those posts in advance of this release, because, of course, as he's about to release the latest and greatest model, the top question for users broadly is, how do we know that this isn't just going to spew similar content? And then, of course, Linda Yaccarino stepping down as CEO of X. So there's a lot going on at X and xAI, but, you know, this latest news that Tesla might have this latest model is pretty exciting for people out there.
And helps it inch back on some of the losses it's experienced earlier in the week because of that ongoing feud between Elon Musk and President Trump. Jackie Davolos, with all the latest on Grok 4, we so appreciate it. Meanwhile, China's Huawei is trying to export its AI chips to the Middle East and Southeast Asia. to establish a foothold in markets dominated by Nvidia, despite ongoing manufacturing challenges for Huawei. It's all according to sources. Our own Ed Ludlow is standing by in Sun Valley, and I want to dig into this with you, Ed, because it's just a small quantity of the chips we understand thus far tentatively going to these places.
Yeah, low volumes targeting Saudi Arabia and UAE in the Gulf, and then Malaysia and Thailand in Southeast Asia. But what our reporting tells us and what our sources are informing us of is that Huawei wants to give access to 910B, prior older generation AI accelerator card, so that customers in those regions can experience the technology and then maybe in the long run look more deeply at what Huawei has to offer. Completely right that it's low volumes, in the thousands is what we're reporting, and Huawei is supply constrained. It has a manufacturing cap on what it's able to produce. But of course, this is politically difficult as well. It looks like this is Huawei going out to the market and that there isn't actually that much reciprocal interest. Saudi Arabia, based on our reporting, seems the most likely to look at those prior generation chips. Saudi has a long-standing relationship with Huawei, but has also said that if America turned around and was like, you're not doing business there, then Saudi cooperates. So it's a dynamic situation, but Huawei flexing its muscles a little.
And some dynamic conversations you're having over there in Sun Valley. How much has everyone been focused in on China-US relations and indeed the big $4 trillion number hit by Nvidia yesterday?
Yeah, I mean, geopolitics and trade are common conversations here. You expect that, right? You have some of the CEOs of the world's largest technology companies here who do a lot of business across borders. Scott Bessent, the Treasury Secretary, made a presentation. There was a moderated Q&A late yesterday morning where he took questions from the audience. Some of those questions related to tariffs and trade. He also kind of gave his kind of longer-term view on the global economy. And on Nvidia, $4 trillion, sure, you know, it's kind of like a market moment in history. What's so interesting, and it was part of the conversation that I had with both Reid Hoffman and Steve Pagliuca last night, which I think we'll play a bit of later in the show, is $4 trillion just the beginning? And they would argue, yes, it is, because even though the cost of inference is coming down, it's Nvidia that still has a hold on that market. And there is more room to run because you have frontier models like you just discussed with Jackie Davalos on Grok 4, but there are other vertical models, very specific use case models where we're just getting started in the development process. So I found that really interesting.
Ed Ludlow, we'll be going back to you and some of your conversations at the Allen & Co event. Thanks so much. Now, look, let's stick with tech, chips, AI, and Nvidia being the winning formula with Ipek Oskadeshker of Swissquote. And it feels as though you probably are going to echo what Steve Pagliuca, what Reid Hoffman, what Ed's just been saying, that we're just at the beginning with this $4 trillion number.
I mean, definitely. The numbers are not surprising right now. And when you're looking at on the valuation basis, Nvidia is not necessarily much more expensive today than it was a year ago. The PE ratio is totally acceptable. It's around 52. But with the upcoming earnings, we think that's going to be pulled back to low 40s. And $4 trillion number, it incorporates not only what Nvidia achieved so far, obviously, yes, but also what it will be achieving. And they're proactively searching clients and expanding their client book to other continents and to other sectors like robotics is very interesting. We actually think that robotics is going to be the next big milestone because giving AI hands, feet, and a body is just going to be amazing. We're just at the beginning of this AI revolution. It's just so exciting.
And other companies benefit too. We think of TSMC, which is the chip maker of choice for Nvidia. Their numbers, once again, according to the Bloomberg mathematics, is about 39% increase in revenue in the previous quarter just gone, Ipek. How much are we likely to see other chip makers really fueled higher? AMD doing well today on the back of it.
Well, we have been quite positive for AMD. It hasn't done perfectly well over the past few months. Now it is back to the bullish consolidation zone. Now we think that companies like AMD, alternative, cheaper versions will be quite interesting when the AI adoption is going to go wider because some companies will be looking for these cheaper alternatives. This being said, NVIDIA is not only offering chips, they're offering ecosystem. And this is where NVIDIA is still beating its competition. This is why probably we see the growth in AMD and the investor interest in AMD remain quite low. But we think that AMD's time will come.
Both AMD and NVIDIA still want to have a presence in China. as an end market. And actually, there's reporting that Jensen Huang is going out to China very soon because he wants to be making yet another specific chip that is allowed to be exported. How much is that a headwind for you, or indeed a long-term tailwind, whether or not they will have access to this market?
Well, China is a very sensitive, is a politically and a geopolitically sensitive market. So when NVIDIA goes into that market, we know that the risk on that specific segment is higher. But the company's efforts in expanding beyond China and the US markets like Europe, for example, and Middle East, which do have deep pockets and very big potential, actually dilutes the risk of, well, not doing business in China. We think that China is still worth trying. As Jensen Huang says, it's not necessarily a good idea to completely ban chips from China because it will only push them to do better. So I think that China is still an interesting market, but if the risk could be diluted like NVIDIA is doing today, then it's going to be only a tailwind rather than a headwind.
Just putting it in the context, and your note does this so well for us, Ipek, I love reading them, that basically NVIDIA is up 1,000% since ChatGPT came to all of us. So AI, generative AI, was put in yours and my hands. How much are your clients balking at the fact that we have seen this run up? I know you talk about the PEs actually being relatively appetizing. We are at a technically overbought level, though, if you're looking at the RSI.
Well, yes, in the short run, we are at overbought market conditions, meaning that NVIDIA stocks may have been bought too quickly in a too short period of time. But what investors look with NVIDIA is not necessarily the short-term dynamics and short-term indicators. They actually do have this very long-term perspective on what NVIDIA will be involved in the next decade. NVIDIA is a company that is going to be at the heart of AI and robotics for the next decade. So if the price is overbought today, it is not necessarily a major, significant downside correction potential for the long term. Investors are really looking at what NVIDIA will mean in 2, 3, 5, 10 years from now. And when you look at that perspective, the company still has so much to offer.
We've talked about Asian companies, TSMC, for example. You're sat in Switzerland. We've got a European tech show recently launched as well. How much are you thinking about the European opportunity here? Are there any names other than ASML that have been coming to light when it comes to AI?
Well, we do have a couple of names. We obviously don't have names like you do in the US, like Facebook, Meta, Amazon. So what's going to be interesting in Europe in terms of AI, I think, is going to be more specific models, sector-specific models, business-specific models, so that they can find the data that they need in order to train these models. We do not have these huge AI labs, these huge platforms that could help building these models. So it's going to be a very different play in Europe, and European companies will be going case by case, and they will be building smaller, more specific models in order to benefit from AI benefits. So it's going to be very different landscape of AI when you're looking at Europe rather than what we see in the US today, the worldwide big companies reaching out to everyone. I think it's going to be much more B2B business based.
Ipek, Oscar Deshkaya, great to have some time with you of Swissquote. We appreciate it. Now coming up, Prime Day, it enters its third day of deals. Have you bought anything yet? We'll take a look at whether it's managing to entice shoppers. This is Bloomberg Tech.
We're really pleased by the engagement that we're getting from our customers and our members. Not only is the event twice as long, so 4 days as you mentioned, but we're also offering more than double the number of deals that are 50% off or more. That's driving engagement across the millions of deals we have in 35 categories. So we're really pleased, but it's very early, of course.
Amazon Prime Vice President Jamil Ghani there, weighing in on the early numbers trickling in yesterday. Let's get an update now with Bloomberg Spencer Soper on day 3 of Prime Day. How hard is it to really discern whether this is going well or not, Spencer?
Yeah, it's very tricky. You know, you're comparing a 2-day event last year to a 4-day event this year. Amazon's experiment is like, hey, what if we kind of slow the sales cadence down a little bit, but spread it over a longer period of days? Will that be better for us? And that's the experiment. So that's where these next 2 days are really going to be critical. Can Amazon kind of sustain this this kind of more muted momentum over over 4 days, or do people just trail off? So that's really what we're looking to see on days 3 and 4.
I mean, talking of Momentum Commerce was an advisor that you went to, or a data analysis service that seems to be showing that the numbers were pretty poor at the start of things.
Yeah, and again, let's emphasize that was the first day of what is now a 4-day event, as opposed to the first day last year when it was a 2-day event. So when you prolong an event, you lose that sense of urgency. People aren't necessarily shopping. People aren't necessarily compelled to act immediately. And when you had the Amazon executive on yesterday, the key word there was engagement. They're pleased with engagement. That means people are kind of poking around, but they're not really buying. So everything kind of tracks. It's just a question of, are people going to keep buying through days 3 and 4? And if they do, Momentum said, the 4-day event should yield a lift compared to the 2-day event last year. But that's the big question. We'll see if Amazon's experiment is working today and tomorrow.
Big bet. Spencer Soper, you stay on it. Thank you so much. Now, coming up, Gecko Robotics says 2025 is the year of the robot. We speak with its CEO live from Sun Valley, Idaho next. This is Bloomberg Tech. Let's get back out to Sun Valley, Idaho, where Ed Ludlow is standing by with a special guest. Ed.
Yeah, let's talk about robotics. And we're not talking humanoid robotics, actually. Really interesting. Gecko Robotics and his co-founder, CEO, Jake Lucerian. There's a lot of attention on you. And one of the reasons why is this super interesting business model. The robots basically can assess the structural integrity of various facilities, core energy infrastructure. But actually, a big part of your business is AI and data. You sell them as a package. Give us the basics on Gecko Robotics, and we'll go from there.
Yeah, thanks, Ed. Well, it's the company was started out with this mission of diagnosing the health of the built world. And so I started out of a college dorm with that ambition and mission. And what we were able to understand and determine is if we start with a foundation of understanding the health of built structures, whether it's a dam or a bridge, a vessel, an oil and gas refinery, whatever the physical structure is, if you understand the health of that, you begin to get really good at understanding how these facilities work and function. And then what we've done is we've used all that information and data and the processing data from the facilities and also the smart sensors that we've built to be able to create an operating platform to help those facilities run, in some cases, 20% less cost for CapEx and running those facilities, but also operate 5, 10, 15% more efficient in some cases. And so the applications on defense and commercial are enabled because we have an unfair data advantage.
For someone that's never seen a Gecko Robotics robot scaling a wall, explain what it looks like, how many of them are out there and deployed in the real world, and what kinds of commercial businesses are using them right now.
Yeah, so the robots feed into this the software operating platform called Cantilever, and the robots can look like the size of a briefcase, climbing up a wall, climbing around, piping. We also have drones or walking robots or smart sensors. But all these tools are gathering information and data and plugging into that central software. And then what we've been able to see is that customers are actually asking, can we put our operational or our IoT sensor data into that platform as well to derive better results, outcomes, or decisions on the ground. So what we've done is we've begun to enable the folks on the ground to become not just blue-collar workers, but engineers, because they can use the LLM that we have inside of Cantilever to be able to understand what sorts of decisions to make, because they have the data that allows them to be superpowered in that way.
So the energy sector is somewhere where you're very focused. Next week in your hometown, home state, there is a gathering, a political gathering with the energy industry. You work with legacy energy to basically say, here's how you could be better. Just explain how the tech works.
Yeah, so you're right. In Pittsburgh next week, the president, and put on by Senator McCormick, is bringing some of the biggest names in energy and AI to the city of Pittsburgh, where Gecko Robotics is based. And so what it's going to be all about is not just what's the state of things and what's the infrastructure for AI look like, but more importantly, the message that I'm delivering and I'm speaking on in particular with some of those leaders is how we should begin to judge AI's impact in energy by how much AI can actually create energy. Example, one of the biggest customers that we have that helps to run 5% of the power in the US, the 5 facilities that we've been able to deploy our technology stack and operating platform at have been able to show a huge increase to the heat rate of these natural gas power plants. The extrapolated impact is about 10 gigawatts of more power without having to create a single new power plant. This is a huge outcome as it relates to how do you combat this issue of we don't have enough energy to power the U.S. in particular to be the leader in artificial intelligence. Energy is the constraint, and so AI should be able to unlock energy, not always the other way around.
And what's so interesting is we're talking about some carbon-based legacy sources of energy. There's a lot of focus on you right now because last month you hit a $1.25 billion valuation. You want to scale. I know that you're kind of very focused on just keep continuing growing. Will we see a follow-on round just to keep that on the hardware side going?
Yeah, we really, so the way that customers buy and work with Gecko is they buy the operating platform and all the robots and sensors.
They don't just buy the robots.
They don't buy any of that. It all feeds into the outcomes that we are able to deliver with the operating platform. And so the biggest oil and gas companies in the world will be unveiling things in the next couple quarters. Same with manufacturing facilities that are making steel or making copper. We go into these old sectors that Silicon Valley has very much forgotten about. And what that means for us is that the scale and the impact of pragmatic artificial intelligence and robotics is hitting this inflection point. And you think about physical intelligence, and Jensen talks a lot about this, physical intelligence in these built environments, whether it be in the defense sector that we work in or it's in the industrial, there is very little physical intelligence. And so we are the leading company as it relates to creating that, which enables a moat for our artificial intelligence to be exceptionally better than those that are coming with a software-only solution. Meaning, to the answer to your question, scaling and increasing the amount of fuel to that fire is something that we're going to need to do in the next 9 months.
We just have 15 seconds, but your relationship with NVIDIA, you happy with them?
Yeah, I'm really happy with them. They've been great, but looking at physical intelligence for these industrial sectors, there's a lot more to go, and so hopefully we can help out.
Jake Lucerian is the Gecko Robotics co-founder and CEO out here in Sun Valley, and a lot of people are interested talking to this guy, Caro.
I bet. It really does feel like the year of the robot. Great conversation, Ed. Thank you. Coming up, our analysts say Apple should consider replacing Tim Cook. More on that note next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's take a quick check on these markets as we are open for trade, and the Nasdaq 100 has been flitting between gains and losses. Earlier in trade, we went down in the red. We're off of our lows. We're off about 0.25%. But when you've got NVIDIA in the red, of course, that pulls us a little bit lower. But more generally, we're waiting on a big bond auction. A lot of the yield movement has been dictating what's happening in the stock market right now. But we are still near all-time highs. Let's move on and think about what is very close to an all-time high. We hit in excess of $112,000 for Bitcoin yesterday. We're up 0.6% on the intraday basis. 111,395 is where we trade. And it really does seem that amid the trade anxiety, there still is a risk asset of choice. Of course, apparently next week is crypto week, according to the House. In terms of Washington, we'll see how those changes in rules and regulations continue to transpire. But let's get back to some of the big tech news here when it comes to AI. Google's Gemini AI gets a new feature. The company says its latest AI update can now produce 8-second videos out of ordinary still pictures if you're a paid user. For more, Bloomberg's Dana Wollman is here to join us. This is really AI Ultra, AI Pro users of Google being able to keep up with what perhaps you're already getting on an OpenAI or with a Runway, for example.
Yes, this is a feature that will be available to paid Gemini users, and it is a technology that Google first launched at its I/O developer conference back in May. But this makes it available to a much broader swath of users, allowing it, as you said, to better keep pace with rivals, and it does have many rivals in this space.
It does have rivals. It does also have a stop-start feeling to Google, because many would say, look, they were the reason, their underlying research is why we've got generative AI in the first place, with the transformer perspective. But they had this sort of inevitable feeling that they were losing pace with rivals. Then they had the issue about whether or not there was some generative AI image features that changed people's race, or there was a sort of a concern there. This is being replicated again in the video, or no?
Yes, so Google had a while ago paused certain generative AI features just for that reason. But here, there are some guardrails in place. That said, we tested it ourselves, and the results were both fascinating and somewhat mixed. For instance, reporter Natalie Lung, who is Asian, she did include a photo of herself, and the AI did change her race in one of the videos without her asking it to. Other goofs, we did ask for a video of someone breakdancing. We did not see any breakdancing, sadly. The AI did follow other instructions we gave faithfully, but not that one. So the results were mixed, and we do expect the technology to improve.
And people do seem to really love what's been coming out in terms of image generation coming from Google and Gemini writ large of late. But meanwhile, Apple, everyone still thinks is behind the curve when it comes to AI. It's interesting, we got a note out today with analysts really talking about how maybe it's time to replace Tim Cook even. We were hearing some view that really the AI focus is what needs to win here from a product perspective rather than having someone in charge who owns the supply chain. But the fierce talent for AI, the war going on, is an amazing scoop that Mark Gurman's been bringing us all week. And now we understand 200 million might have been parted with to nab their head of AI.
A pay package worth more than 200 million. And I should say that this package does include not just a base salary and a signing bonus, but stock options. And there are a few things tied to that. One, someone would have to stay with the company for a certain period of time, so they wouldn't get all that money if they left early. And it also is tied to the performance of the stock. So it does assume that the stock would reach certain levels. So if it doesn't, someone wouldn't receive quite that large of a pay package in the end.
And that is, of course, all as we see transfer of talent going from Apple to Meta, or everyone to Meta, as Mark Zuckerberg is all in on winning the superintelligence race. Where are we, though, with the feeling around Apple right now as to ultimately whether its business model is really necessary to be the generative AI developer of choice, or whether it ultimately can just be the generative AI product user of choice? We just go to it to use other AI offerings.
So just given its overall stock performance and its market cap, I really hesitate to call it struggling.
Yes.
But I think its struggles in AI specifically have been well documented. I think its efforts to have a new blockbuster hardware hit have been well documented. I think we know that the Vision Pro has not been a great seller, even though reviewers and sort of tech enthusiasts have praised it for being innovative. Yes, the company does have ways to go in AI, and certainly the poaching is yet another setback in that space.
And maybe that's why hardware focusing with Apple Senior VP of Hardware Engineering, John Turnus, is why he's being singled out by the note coming from Lightshed analysts as to whether he'd be the right replacement for Tim Cook. Dana Wollman, fantastic to have her on all things Google and Apple. Now, let's return to that talent war that we were just talking of. Greylock's Reid Hoffman calls multi-million-dollar offers for AI talent, quote, not crazy, when such investments are expected to generate billions for a company. Now, he weighed in on the escalating AI talent war between Apple and Meta, their own Ed Ludlow over in Sun Valley.
Well, so essentially, one of the things that's good about having an open marketplace of anything, including labor, is that you essentially get multiple bidders, and that's what sets a price. And so the fact that someone goes, I'm willing to spend $100 million in order to get this talent, you think, that's crazy. Why would they possibly do this? Higher than the vast majority of CEOs, et cetera. Well, if that one, what you're judging is that one talent will potentially create billions of dollars of value for you, whether it's in a social network, whether it's in, a search engine, anything else as a way of doing it. And so if you think that, then that's just a bold bet.
What Sam Altman, the CEO of OpenAI, said was that that particular figure, which he had accused Meta of offering to some OpenAI staff, what he claimed was it was crazy. But it sounds like it's not crazy, really.
Well, I don't think it's crazy when we know that AI is going to transform all businesses and all industry and the entire tech industry. And these are trillion-dollar companies, et cetera, at the high end, and a whole stack all the way through down into billions.
Today, for a brief moment, one of them was a $4 trillion company.
Exactly.
Please continue.
Yes, NVIDIA. And so so saying, hey, this piece of talent is a risk-adjusted bet, that makes a difference in that, that's just a risk bet. You might say it's a dumb risk bet, but it's not dumb to do if those are the stakes you're playing for.
Greylock partner and LinkedIn co-founder Reid Hoffman with Ed Ludlow. Coming up, we speak with the CEO and co-founders of Varda Space, their latest Series C funding. Again, we're live from Sun Valley. Stick with us. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Now, Varda Space Industries has announced it's raised $187 million in a Series C funding, bringing its total capital raise to $325 million. Now, the company aims to produce medicines in low Earth orbit. Ed Ludlow is standing by in Sun Valley with Delian Asparov, who's co-founder of Varda. And we're also joined by Will Brewy, Varda's CEO. And Will, I start with you. The money, what will you use it for?
Oh, we have big plans. The Series C raise is great because it allows us to open up our biologics lab down the street. And the entire purpose of that is to prepare biologics formulations, so medicines for flight in outer space. And the entire purpose of this is microgravity allows us to create new drug formulations that otherwise would be impossible to create on Earth. That's the whole purpose of Varda. And so with this Series C funding, we're able to build out a large lab space to vet those drug formulations before flying them and create an entire pipeline on the way to space.
Delian, I just want to point something out, which is that you were also a partner at Founders Fund. And this has worked exactly the same way it always works. You recuse yourself from the round and you represent Varda, but they participated, as did Peter Thiel as an individual. Just to expand a little bit on what Will was saying, you know, one of the big changes that you guys have made over the last year is to start manufacturing yourself away from Rocket Lab, who used to do that as kind of the third party for you. Why is that significant, and how does that ramp look?
Yeah, I mean, they were, sort of phenomenal partner, and we're deeply grateful, to them in that they got us off the ground, very quickly. But as we were looking to, sort of scale up our cadence of flights and ability to truly control our supply chain, we had to go more full stack. And you see this in a variety of different aerospace companies where as they scale up, they tend to go more full stack over time. So that's going to allow us to, fly 4 times next year. And then after that, ideally start doubling basically every single year and be able to control that doubling entirely in-house. And then it just expands the capabilities that we have on the spacecraft. In terms of biopharmaceutical production. By owning more of it, we're able to expand the capabilities of what we can have on board.
Well, Dell's talking about all of the ramp in launch, getting to orbit. The big, beautiful benefit is zero gravity, right, in the pharmaceuticals context. But then you've got to get back down to Earth, and that's been one of the really exciting parts to track with Varda, the video in particular. Explain how that process works and also how it's going to go going forward.
Yeah, so you hit the nail on the head. The entire reason for going to space is for microgravity. It's just a fundamental force of physics that you can't change on Earth. We don't want to go to space to have to make these new drugs. You just have to because of the laws of physics. And so our spacecraft allows us to do that quickly and cheaply. And a part of that is once we make those drugs in orbit, in microgravity, so that they're different than they would be made if they were on Earth, we have to bring them back. And that's certainly the most exciting part for the aerospace engineers here. My background is also aerospace engineering. Like you said, the video is phenomenal. We hit the atmosphere going Mach 25. So that's 25 times the speed of sound. 27 times the speed that you go on a commercial airliner. And so you rip apart the atmosphere and you create this beautiful plasma of a shooting star for over a minute across the sky. It's beautiful on the way back.
The passion is real. Delian, the demand is real as well. I'm interested in the DoD and the government perspective here because we have seen so much more focus coming on space and defense more broadly.
Yeah, the new Secretary of Defense, in the early days of the Trump administration, came out with what his national security priorities were, sort of going to be, and amongst the sort of top 3 were nuclear weapons modernization, the development of next generation hypersonic capabilities, and shipbuilding. And while Varda doesn't really sort of build ships, we do help the DoD sort of with the other 2, and have a variety of different sort of collaborations across groups from the Air Force, Navy, and NASA. What they're primarily interested in is, as Will mentioned, as we come into the atmosphere, we're going Mach 25. It's a regime that typically is very difficult to study on the ground and really understand what the flight dynamics will be like. And so you can think about the value proposition for Varda to the Defense Department as effectively like a hypersonic wind tunnel. They can attach net new materials, wing shapes, sensors onto the vehicle as we're coming in as a way to validate the subsystems sort of performance before they go and take that and integrate that into the ultimate sort of production system. And so by enabling faster testing, more frequent testing, cheaper testing, it allows us to expand on our capabilities and ideally both catch up to and surpass some of our near-peer adversaries like China and Russia that have demonstrated some pretty phenomenal hypersonic boost glide capabilities.
I also think that the competition is somewhat closer to home, or maybe it's a frenemy situation, Will. You have got such a broad experience. You've been flying the Dragon yourself when you were working at SpaceX. You've also worked in banking. You've founded your own venture fund in many ways. But Will, I ask you now, what is your biggest headache? Is it talent? Is it the race for talent? How do you expand?
Well, believe it or not, there's not that much competition in reentry because we're so much different than other commercial reentry vehicles like SpaceX's Dragon or Boeing's Starliner. We are much small. We're off axis in almost every way. We're much smaller. We're higher cadence. We're not human rated, and we're lower cost. So it's more of a complementary situation. As far as headaches go, a lot of them are gone now thanks to a working spacecraft and funding to grow. It's more about enthusiasm and excitement here. I would say the challenge over the next couple of years is really to scale up that cadence, because as we scale cadence, we begin to look more and more just like a zero gravity oven to the pharmaceutical industry. They quite frankly don't care that we're going to outer space. They only care that we can deliver new drug formulations, and we just happen to have to do that by going to space and back. So the more often and the more frequent we can do that, the more easily it is for us to integrate into the pharmaceutical supply chain. And so that's the big challenge over the next couple of years is increase cadence, fly more spacecraft, and develop more drugs on board.
Delian, the misconception maybe or misunderstanding about what Will's talking about, ramping the cadence, is the cost consideration flying SpaceX on transporter missions. Actually, my understanding is it's not that great a cost. But would you talk a bit about the relationship and how it works, hitching a ride on Falcon 9?
Yeah, I mean, to give you a sense, like, of our total all-in mission costs, the SpaceX launch costs represent about 20-25% of our costs. So it's not like the majority or anything. It's also definitely one of the larger line items. But there's a lot of other things that go into operating sort of our business. Our business could not exist without the sort of Falcon 9 being reusable and that sort of transporter program. If you think about even sort of 5-6 years ago, your only real option to get up to orbit was having to buy a full dedicated rocket or find some way to squeeze yourself onto a large geosat sort of launch and, be on board, but, find your own way to orbit. Now, these transporter missions, they're doing them, I think, on the order of 3 times a year. They've started to add on, different inclinations in orbit. They have these bandwagon missions that go to, sort of polar orbit. And so it's been a really, sort of critical, sort of part of our ability to actually succeed as a business. I think there's just this interesting, sort of pattern in technological history where when certain infrastructure layers get built up, it enables these net new, sort of business opportunities, right? In some ways, for a business like Uber or Airbnb to get built, you kind of needed mobile to become very distributed and have the app store, and that's what really enabled those business models. We think of, sort of the access to space and what SpaceX provides us is the same way. It's a fundamental infrastructure layer that enables our business, and it wouldn't have been possible, sort of without them. And so we're thrilled to have them, sort of as, sort of partners, and, have lots and lots of, rockets, sort of booked with SpaceX. I think, we've booked out all the way through, I think, like Q3 27 or something like that.
Will, we recognize here on Bloomberg Tech, there are many in the space industry who have looked to the defense apparatus of this country and the defense use case to kind of start to get off the ground because of grants and because of the availability of freedom to move. But long term, what is the business model? Who will your customers be when you're able to bring payload back down to Earth, pharmaceuticals developed in that zero gravity environment?
Yeah, it is a new technology, and what's cool going to the defense aspect, and Delian hinted towards this, is that because reusable and commercial launch is a unique American asset, Varda is also a unique American asset on top of that. So it's almost a leapfrog above everyone else. And so we have this cool armada of small, low-cost, high-cadence reentry vehicles that can provide a service continuously for the Department of Defense as a hypersonic wind tunnel, like Delia mentioned. So to answer your question, what that means is now the Department of Defense can test things like sensors, new materials for heat shields. They can test flight computers and RF or radio frequency systems, navigation systems. So very similar to like a wind tunnel where it's acting as infrastructure so that the Department of Defense can advance new technologies faster and cheaper.
Fascinating conversation. Thank you for all joining us. Will Brewy, Delian Asmarov of Varda, and of course, Ed, stick with us out there in Sun Valley. We thank you. Now, coming up, we're going to hear from Steve Paliuka of Bain Capital and his outlook for the AI sector. This is Bloomberg Tech. Let's head back to Sun Valley, where the future of AI is one of the hot topics among tech leaders. Steve Paliuka of Bain Capital sat down with Ed Ludlow to discuss, well, why the AI revolution reminds him of the early days of the internet, and actually talk about the potential for AI to transform productivity.
It reminds me a lot of, the period of kind of 98, 99, 2000, 2001 in the internet.
That's worrying.
Well, no. There were some fits and starts, and there'll be some fits and starts in AI. But I think we're almost past the fits and starts stage. You've got kind of 9 global foundation model companies, 8 or 9 out there, Perplexity, OpenAI. We actually funded a startup from MIT that has modeled a new AI system on a worm's brain, believe it or not. Do you know how many neurons a worm's brain has in it?
Educate me.
305.
Okay.
How many neurons do you think a human brain has in it?
Many, many more.
86 billion.
Right.
And you're smarter than most, so maybe you have 87 billion.
It's kind of you to say.
But these wonderful scientists at MIT came up with this model called the neural network model. And of those 9 companies, they're one of those 9 companies out there that are state of the art. They actually, because they've used the neural network model, they use 80% less GPUs to build the model. And therefore, they'll be perfect for edge devices like phones because you don't need the power. And so a ChatGPT model costs about $500 million of GPU to load it. You can do that for 85 or 90% less, and this model can sit on phones, and they're signing deals with edge device companies, as we speak. So it's very exciting, and all the costs are going down for the chips, for the model loading, and as opposed to the internet, which there were some very few big winners. I think there will be a lot of winners here because there's going to be vertical models and foundational models, and the vertical models will be chock full of expertise. So for example, a medical diagnosis model that focuses on disease states and giving you a diagnosis. And some of these models are proving much better than humans because it's a game of elimination. Once you put the right data in, it gives you the diagnosis. Same thing, reading x-rays.
Right.
The models, AI models reading x-rays are now beating the top humans in the field. So really, we're only still in the early stages. It's going to revolutionize productivity. It's going to have the same impact the internet had 20 years ago, and it's going to be a 20-year run, and that's why NVIDIA's value is so high, because they're in the catbird seat of the chips needed to power that revolution.
Steve Paliuka of Bain Capital and the Boston Celtics. Now, that does it for this edition of Bloomberg Tech. Next week, Bloomberg Tech will be live from Panasonic's new EV battery plant in Kansas. Tune in for an exclusive interview with the Panasonic North America CEO on Monday. And meanwhile, don't forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. From Sun Valley, Idaho, and from New York, this is Bloomberg Tech.